In this video, I'm weighing the pros and cons of waiting for interest rates to fall before making a move. Particularly on the buy side, though if you're on the fence of selling your home now or later, this may apply to you as well. At the time of recording, the number of available homes on the market is at a 20-plus year low at the same time that interest rates are at a 20-plus year high. That has created this diabolical chicken or the egg, rock in a hard place scenario where potential home sellers don't want to sell unless they have to because they don't want to trade in that 3 or 4% interest rate for a 6, 7, or even 8% interest rate. And buyers, even if they are okay with that higher interest rate and lower buying power, which many are, they're having a hard time finding a home because of that aforementioned lack of inventory. Everybody seems to be waiting for something to give, and that something most likely is going to have to be interest rates. The majority of the most well-respected economists and sources that I pay attention to, they're all predicting that interest rates will come back down somewhat in the months ahead. Whether that's by the end of the year, early next year, or later than that is obviously yet to be determined. Quick disclaimer here, I am a former Series 7 licensed financial advisor, I'm not one now. I'm not an economist. The opinions that I share here are just my opinions and observations and shouldn't necessarily be taken as financial advice because odds are I don't know what your situation is, your risk tolerance, or anything else that I would need in order to properly advise you. My name is Jake Lyons, realtor in Chicago with @Properties, bringing you well-informed, data-driven content as always. So with that being said, let's go ahead and get right into it. I have 2 pros and 2 cons. I'll do the good news first. Waiting for interest rates to come down, pro number 1 is more buying power. Duh, right? I mean, that's the whole entire point of waiting for interest rates to come back down. At a 5% down payment, depending on taxes and insurance and things like that, a $2,500 mortgage payment at 8% interest gets you a $300,000 home. At 7%, that same $2,500 gets you a $325,000 home. At 5% interest, it gets you $385,000. We all know how this works. It's an incentive that's large enough to make the largest asset class in America slow down to the point that we're seeing now for a reason. Interest rates are obviously very important for buying power. Pro number 2, more options on the market. So as mentioned before, buyers aren't the only ones waiting for rates to drop. It's very rare right now to see somebody selling their home with the intention of moving within the same city. Here in Chicago, this anecdotally speaking, though I have seen some good national data to support this too, basically the only people who are selling are people with some kind of external pressure forcing them to do so. People who are moving out of town for a job, or people who maybe are starting a family and deciding to move to the suburbs, along with like your typical like divorces and estate sales and things like that. In theory, an easing of interest rates should entice more sellers to enter the market with the confidence of being able to afford their next place that they buy a little bit better and free them up to make less drastic moves, making the whole market just a little bit more liquid. This would mean that the main issue plaguing the housing market, that being these crazy low inventory levels, should improve and there would be more options on the market. Depending on how much the ratio between sellers and buyers actually improves, this could mean finally seeing that elusive improvement in affordability from both a price standpoint as well as an interest rate standpoint. Although, as I'll get into shortly, I'm less than optimistic on the idea that prices would actually materially improve as much as we think and hope that they would. This brings me to con number 1, more competition when those rates come down. So clearly, you're not the only person playing this waiting game. Millions of would-be market participants are waiting for the exact same thing to happen. When that thing does happen, there's going to be a flood of new competition. While interest rate decreases would likely mean some kind of improvement in supply for the reasons mentioned earlier, the sheer amount of time that it takes for a typical seller to get ready and list their property and get all their ducks in a row means that, multiplied by a million, means that there will necessarily be a lag in the amount of time it takes for that pent-up supply to meet the rush of that pent-up demand entering the market. Even when that pent-up supply does hit the market, at least here in the areas of Chicago that I typically work, the difference between demand and supply right now is so large that I don't really see a world where supply meets or exceeds that demand anytime soon unless something drastic and unforeseen happens in the economy, like the kind of event that really nobody actually wants to see happen in the long run. This means significantly more buyers chasing a marginally higher number of available homes. This means more multiple offer situations. This means prices potentially skyrocketing again like we were seeing in the immediate aftermath of COVID before the rate hikes. This means all the reasons for you waiting for rates to come down potentially backfiring. And con number 2, it might not happen. at least not as soon as we think. Look, the real deal here is that economists are wrong all the time. But the brightest minds we have working on this stuff, making policies that impact us, making projections based on billions of unpredictable real-time variables. These people don't even know how this stuff works. Like, not really. They have theories that might work for a little while until something happens that disproves that theory, and then some other economic theory rules for a time until that one, doesn't work anymore. High-level economics is incredibly hard, and if the last few years have taught us anything, it should be that anything at any point can come out of left field and totally throw us for a loop. Now, to be clear, I'm not predicting this, and I don't actually think this will happen, but what if interest rates don't come back down? Or don't come back down for many, many months, or many, many years, or decades even? Look, we were above 7% for almost 30 years, starting in the early 70s through the early 2000s. The lowest they got in the 80s was around 9%. In the whole history of mortgages, only since the '08 recession has there ever been a time when they weren't at least 6%. So there's plenty of historical precedent to suggest that where they are now is really kind of the baseline of where they should be, and that we have simply regressed back to the mean after a decade plus of artificially induced low interest rates. So what is the cost of waiting for you in this scenario? Is it more years of paying 100% interest to your landlord in the form of rent with tens of thousands of dollars paid out that could have been building you equity? Is it putting off a move that you know you need to make in order to move on to the next stage of your life, whatever that might mean for you? Only you know for sure, but these are the questions that I would be encouraging you to ask. In conclusion, there are, of course, risks either way, just like most things in life. If you trust the devil you know and jump into the market now with its high rates and low number of available options, sure, you won't be able to get quite as much bang for your buck as you could a couple years ago, but you'll at least be in a position to get into the market with relatively less competition than there will be if rates do fall. And you can always refinance into that better rate and save a lot of money that way, knowing that you bought the home for a lower price than what it would probably go for in that higher demand environment. As they say, you date the rate, but you marry the price. And if you wait for rates to drop, there may be a few more options on the market and you'll potentially get more bang for the buck, but you'll likely have some more competition going for the same homes, and you may have to pay a higher price for the home itself, even if your monthly payments are the same or lower. Hope that helps. If you want to continue this conversation, feel free to reach out to me or schedule a consultation. The link and contact info for that is around this video somewhere. Also, would love a like, a comment, subscribe if you found this helpful, and would like to be notified of other helpful info that I put out.